right. So basically it's coming all from instead of paying to directly to the property, by insurance policy, pay cash and refinance the policy, basically, get the money and now buy the property with that money. So does it affect with the leverage of, so do they buy the properties cash or they still get loan on the property?
So let me give you an example. I'll give you two examples. The first example is how I first started using it, and I'll give you an example of how I use it now. Let's say that when I was buying single family houses up in Kokomo, Indiana, I have, like I said, I have 6 policies now. At the time, let's say I bought a $40,000 house. I knew that I had to put 10,000 of lipstick on it, and it would be worth $70,000, right? After I bought it, right? You know how it is. You buy something at a discount. So
Mhm.
I would take a policy loan for $50,000 for the purchase price and the rehab. I'd
Mhm.
be all in with the insurance company's money of $50,000, right? And what happens is that's not my money. That's the insurance company's money.
Yeah.
My money is still in my policy, compounding and growing the whole thing. And after I go and rent the space out, I have, 6 months, 9 months of lease. I have the lease season. I call my local bank, Community First Bank, Renaissance Bank, whoever it is. And I say, hey, I like to refinance into permanent debt. And they give
Mhm.
me a loan. The after appraised value is $70,000. Shocking. They give me a loan of 55,000 bucks. I take that 55 and I put it back into my whole life policy. So essentially, I was using my life insurance candidly as like a bridge loan. I've done it
Mhm.
that way. I've done things on my vehicle, my Chevy Tahoe. When we bought that car back in 2022, after the trade, and it was like $52,000. So we went down to American First Credit Union and we said, hey, if we borrowed from y'all, what would it cost for us to use your money? And they said
Mhm.
it'd be 4.5% or whatever the number was. So that payment was going to be $896 a month for that vehicle. And so what we did, my wife and I, Rachel, we essentially took a policy loan for the $53,000. We wrote a check to Donahue Auto in Birmingham or Pelham, if you're familiar, and we walked off the lot with the vehicle. But what I do now every single month is I pay $896 back into my whole life policy. So what happened is I now own the car, I own the collateral, I control the cash flow. My life didn't change. I was going to have to pay somebody 896 bucks anyway, whether it was myself or whether it was a black hole of a credit union. But most importantly, the extra interest that the credit union or bank would have earned, I'm now earning, and my life didn't change. So I'm in control. I earn the cash flow, and I'm also earning the interest that the bank would have earned, and my life didn't change. But now that's just another way to do it. But now, really, what I do, whenever I have a deal like we got this $2 million deal that hopefully we're gonna have on a contract this afternoon. I'm waiting for my guy Sam to call me. 2 million bucks. The earnest money on this one is 25,000 bucks. I'll take a policy loan tomorrow, on Monday afternoon, and send that to the title company. So I'll use the insurance company's money to tie up a $2 million deal, and then I'll go underneath and start negotiating how to get creative with the terms. So, and then with the banks and everything. So that's just kind of the way from 30,000 feet how I've like discovered how to, make something happen, I guess.